So this is what you didn't hear in the last video. So the price pressure momentums refers to the angle of attacks or the various moving averages. So we have here ppm1 referring to the 10 period moving average, ppm2 referring to the 21 period moving average, ppm3 to the 40 period moving average, and then ppm200 to the 200 period moving average. All of these moving averages as a result of the 10.77%, then it was 11% plunge in the stock, are now severely bearish. But the 200 period moving average was equal, it was already bearish then. And all the derivatives, especially for the 21 and the 40 are, you can see all their derivatives are positive, indicating that the selling pressure is losing its momentum. Okay, so first derivative is still, as of then, still bearish, okay? Still declining, but decelerating. Robustly positive second derivatives, strong positive acceleration, bottoming process beginning, okay? Strong recovery signal, accelerating upwards, positive momentum building, stabilizing. But in the case of the 200 period moving average, it was already decaying, persistent downtrend. So we're really not going to give a lot of thought into that. Key insight: the positive second derivatives suggest price pressure ppm 1 to 3 now have momentum exhaustion and potential reversal formation building up despite negative absolute values. Yes. So here we have the market grid and the probability distribution. So the market grid gives you a range of prices within which the stock has the potential to trade within. Okay, so this is the top of the grid. Okay, the value there is 212.99, and then this is the bottom of the grid, 181.69, and we have the various probabilities and then the time frames. So then the price was 196.31. Currently, the price is 198.30. Okay, it has returned to the sort of loss we had when the previous video was recorded. Okay, so these are the various setups. Sorry, various trade setups. It's not a recommendation that you should you should take them on board. It's not a recommendation. They are not recommendations. If you implement this, you may lose money. Okay, so entry zone. Currently, the stock is currently trading above this entry zone, 193 to 196. Okay, optimal entry will be 194.50. Targets will be 201. That's the first resistance value. And then second target will be 205, second resistance value, 209, the third resistance value. So these are also trying to indicate that in this market grid, amongst other things, what it also tells is that if you're already in a trade and the stock is approaching its resistance values, it's also an indication that you should be considering exiting or reducing your position size, amongst other things as well. And if you want to get in, it is also when it's retracing towards the sort of support levels that you may begin to consider getting in. But I'm afraid they are on in this case it didn't. The entry zones are at a premium to these support values. Yeah, even though of course it's indicating that this sort of level is one of the key entry zones. Yeah, but it could also retrace towards these sort of levels. But if that is what is going to happen, I really can't say for sure whether that will be the case. So the rationale of that first trade setup, this is for short term between 3 to 10 days. The rationale is that the second derivatives on the the 10 to 21, 10 to 40 period moving averages are indicating momentum exhaustion. Okay, and the extrapolation of its 3 period moving average is forecasting 205.64 as or rather supports the extrapolation of a 3 period moving average forecasts supports a bounce towards 205.65, and oversold condition leaves all moving averages oversold condition relative to all moving averages creates a reversion opportunity. Yes. Okay. Okay, let's see now the long-term setup, 3 to 8 weeks. Um, the criteria will be daily close above 201.03 and price pressure momentum turns positive. Uh, or if the price reclaims 210.20. So your entry zone will be 202 to 206 on confirmed breakout. Your target will be 21 210.20, second target 216, third target 220, and extended target will be 230. Stop loss will be 196.5. Okay, so rationale is that for the extrapolation of the 40 period moving average at 210 suggests mean reversion to the 40 period moving average. Positive first derivatives on the 21 and 40 period moving averages show momentum shifting. Okay, so risk factors: 200 period moving average deeply negative with worsening derivatives. Okay, so key decision points. Yeah, close above 201 plus the 40 period moving average above above bearish breakdown, close below 193.65 with the volume. Bullish confirmation close above 201.03 plus price pressure momentum, yeah, ppm 3 above 0, yeah, greater than 0. Okay, so current stance, the market is in a bounce decision zone. The second derivatives suggest that downside momentum is exhausting, but confirmation is needed. The short-term mean reversion trade offers a better risk reward, while the long-term setup requires a patience for structural improvement. So, yeah, see what you make of all of this. This is just to compensate for the lack of audio in the last video. Thank you very much for watching this video.